Rivian begins laying off 6% of its workforce. Coinbase lays off 18% of its workforce. The CEO cites an upcoming crypto winter. Microsoft confirms job cuts after calling for growth to slow. Peloton to cut 12% of workforce in fourth round. Not the first, not the second, not the third, the fourth round of layoffs this year. Shopify stock sinks 14% after company says it will lay off 1/10 of its workforce. Snap plans to lay off 20% of all the employees, and this leads us to where we're at today, where Salesforce announced just this morning that they're going to cut hundreds of employees. It is estimated that they're going to let go at around 500 employees or so, but regardless of what the number comes out, you see that across the board, companies are beginning to lay off employees. And if you look at this picture here, Meta and other big tech companies announced layoffs. You see examples of big names like Rivian, Stripe, Klarna, Coinbase, Netflix, Robinhood, Microsoft, Peloton, Snap, Twilio, PayPal, Shopify, Carvana, Lyft, Twitter, and Tesla are all just some of the big tech examples of big names of big companies that are beginning to lay off employees. Some of them are small, like Salesforce, just a couple hundred people, and some are very large, where you can see some companies laying off 1/5 of the entire company's workforce, like a Snap Incorporated. Now let's close out these tabs, and let's get off of these companies, because that's not what we're here for today. We're here to talk about Salesforce. I want to talk about why, despite this company laying off some of its workforce, which is very small, I might add, is not a big concern of mine. It's not a big worry, because if you look at my portfolio here, you can see that my holdings currently have a large position built into CRM Salesforce. And Salesforce, as of the time of me filming, makes up about 30% of my invested net worth in my growth portfolio. Now, it's very easy to look at this and get concerned and say, Jordan, you're risking a lot of money and capital into a company that is uncertain and is now laying off employees, but in my opinion, I think we're just getting started. I think that this company has a lot of long-term opportunity, a lot of upside, and I think it's one that will be successful in the long term. We're going to talk in this video why that is, why I think it's a fantastic company, and we're going to talk furthermore about this company's investor day that they just came out with, its customer base, the type of business that it has, and more importantly, the number one reason why I invest in it, the moat. It's going to be a fun one. Stay tuned. If you haven't seen me before, my name is Jordan. I'm a millennial investor. As of the time of me filming, I have a $35,000 portfolio. Here's my performance down here since I joined this brokerage. If you want to see this broken down in my charts I have right here, I have my balance since starting YouTube at $1,500 back in April of 2020. And now you see my balance today sitting in the mid 30,000 range, which fluctuates by the day. My holdings, as I mentioned, I obviously have Salesforce at 36%, but I also have 3 other companies in the growth portfolio in order from largest to smallest. It goes Salesforce, Amazon, Google, and Crocs, and they're all pretty evenly weighted, except I am a bit heavy Salesforce. My performance year to date compared against the main indexes, the S&P 500, the Dow, the NASDAQ, the Russell 2000, so far we're doing pretty good. We're outperforming basically every index here other than the Dow, but I would like to consider that a win. While negative 13% in most years is not a good performance, in this year, in 2022, with how rough thing has gotten, that's actually not a bad performance. Here's my monthly YouTube income, tracked month over month, and then my lifetime YouTube income since starting my YouTube channel back about 2.5 years ago. Now, if you want to see my portfolio for yourself, if you want to invest in them, or if you want to have mentoring opportunities, I have 2 that are shared down below in the description, the 4 growth stocks that I just mentioned in their weightings, and then of course my dividend growth portfolio, which has these 20 companies which provide defensive capital growing opportunities for investing in long-term businesses that will likely outlive myself. I think that these companies are going to do great. I think that they have lots of opportunities, and this is why I share them publicly. If you want to invest in it yourself, this is down below in the description. You can get $10 for getting signed up, and you would help support me in the channel. Let's go ahead and jump straight into Salesforce stock and talk about this business as a whole. And I feel like I repeat myself all the time, and the reason why I have this company as my number one player is because going back when this company was a baby business, back in the 90s, back in the early 2000s, they just pretty much had Sales Cloud, and then shortly after they added service. And it was a one-hit company. They had one type of business. And then see where this company's at today, and you can easily see that they have added multiple products, expanded their economics, expanded their moat, expanded their customer relationship opportunities, and now have just exploded in size. Just going back about 20 years ago, I mean, I know that's a long time ago, but when this chart started, they were doing 0.02 billion, about 20 million in revenue a quarter. That has grown to $500 million a quarter, to $1 billion a quarter, to $2 billion, $3 billion, $4 billion. And today they're sitting at $7.7 billion. And very, very soon, I believe next quarter or so, they're going to be passing $8 billion in recurring revenue a quarter. Furthermore, the reason why this business is so profitable and such a long-term opportunity is because it's a recurring revenue, high margin business. To compare it to one of the largest companies in the world, the second largest company on planet Earth to be in fact, is Microsoft. The reason why this company's done so well over the long term and why the stock price continues to go up is not just because the company has grown. Sure, that's a big part of it, but the reason why this company has grown so much is not just because they can expand the business, but it's also because it's such a defensive, profitable business. If you look at the overall revenue chart, you can see that the business has been growing. Grew 10% compounded over the last 10 years, over the last decade, and they have reached tens and now hundreds of billions of dollars a year, breaking $200 billion this year, and their free cash flow has grown very similarly, growing 8% compounded over the last 10 years. You can see it grown from originally around $10 billion up to 20 to 30, and then now last year's $65 billion. Furthermore, the business becomes more profitable, becomes more efficient, because as software companies go, if you look at the operating margins, if you look at the profit margins, over time, they become more profitable and they become more efficient. During these original time when they switched the business back in around 2010, 2012, when they started becoming a recurring revenue, subscription revenue business, they had profit margins at around 23 up to 30%. Today, in the most recent year, they produced 37% profit margins. And I think we're going to see a similar story for that of a company like Salesforce. Now, there are many big moats. There are many companies out there that have defensiveness in their business model, and I think that Salesforce is one of them. Why do I think that? Well, there's a couple of reasons why. And I think that this little article here describes it perfectly. It's such a very brief, very quick overview of why I think this company, I read a long time ago that said, if you can't explain to a 5-year-old, I believe it was Peter Lynch that said this, if you can't explain to a 5-year-old why a stock is going to go up, then it's likely not a good investment. And this is so simple how this company can become dominant, can continue to expand, multiply its revenue, multiply its profitability, and grow in market cap, which obviously makes money for someone like myself as a shareholder. Let me read this really briefly. It was wrote just a couple months ago, like 5 months ago, by this writer named Dan, a CPA who's a senior equity analyst for Morningstar, which is one of the most reputable research firms in terms of the equity markets in the entire country, probably in the world, in fact. And I just want to read really briefly what he wrote. And it's titled, Salesforce.com is expanding its empire. It says, quote, "We believe Salesforce.com represents one of the best long-term growth stories in software." It says, even as revenue growth is likely to dip below 20% for the first time at some point in the next several years, we believe ongoing margin expansion should continue to compound earnings growth of more than 20% annually for much longer. After introducing the software as a service model to the world, Salesforce.com has assembled a front office empire that it can build on for years to come. In our view, Sales Cloud represents the original Salesforce automation product, which streamlined process management for sales leads and opportunities, contact and account data, process tracking, approvals, and territory tracking. Salesforce.com's critical differentiator was the software was accessed through a web browser and delivered over the internet, thus inventing the SaaS software business delivery model. Service Cloud brought in customer service applications, and Marketing Cloud delivers marketing automation solutions. These solutions encompass nearly all aspects of customer acquisition and retention, and in our view are mission critical. Salesforce platform also offers customers a platform as a service solution complete with the App Exchange as a way to rapidly create and distribute apps. We believe this further strengthens the substantial community of Salesforce users. In our view, Salesforce will benefit further from natural cross-selling among its clouds, upselling more robust features within product lines, pricing actions, international growth, and continued acquisitions such as recent deals for Slack and Tableau. Salesforce is widely considered a leader in each of its served markets, which is attractive on its own, but the tight integration among the solutions and the natural fit they have with one another makes for a powerful value proposition. In our view, to that end, more than half of the enterprise customers use multiple clouds. Further, customer retention has gradually improved over time and is better than 92%, which we expect to grind higher still in the coming years. Now, I compared this company to Microsoft because I really look at it as mini Microsoft, and I think that article summed it up perfectly. It talked about how its old school model of selling products in a one-time sale did not apply to Salesforce. This is a software as a service company that only sells subscription recurring based revenue. And if you look at this investor day, I think this wraps it up perfect. This is a perfect example of why this company's moat, in my opinion, is so strong. Now, if you look at the customers that only have one of their 7 clouds, one of their 7 products, it makes up a pretty good chunk of the pie. I'm not going to lie. And these are primarily people that use either sales or Service Cloud, their most popular products, primarily the Sales Cloud. They're where they really got their bare bones start, and customers have been using these for decades. Now, of these customers, they can leave very easy. If you just have one part of your business, it's not that hard to switch. Pretend that you're a company that sells insurance, okay? And you're getting your leads through a company like Salesforce. You're paying Salesforce for all these leads, and you rely on them to generate revenue opportunities into your business. And if you find a better opportunity, you can switch to a different software and start getting leads from other platforms, other software companies. Now, what if you added on a different step? What if you also had service? What if you also had service opportunities where you use Salesforce not only for leads, but also for service opportunities? Okay, you can still leave, but now you're getting a little bit more ingrained. What if you added a third option? What if you had their AI capabilities? What if you had some of their data tracking capabilities, some of their customer service options? What if you had some of their data exchange? What if you had Tableau, their analytics platform? What if you had all these different services? You see that it goes from 1 to 7, and the percentage of people that use 7 are smaller and smaller. Most people don't need 7 clouds for their business, other than the Goliaths and the ones that are really invested in the Salesforce platform. However, if you look at these charts, they're almost in reverse. If you look just from 4 clouds and above, which by the way, the people that have 4 and above really become ingrained in the system. It's easy to switch one platform. It's kind of a nuisance to switch 2. 3 is a little bit difficult, but by the time you get to 4, or God forbid even more than that, how are you ever going to leave when you rely so heavily off of one software? 85%. You heard that right. Not 30, not 40, not 50. 85% of the annual recurring revenue come from these people who have 4 or more clouds. And these are the customers I care about. These 1, 2, and 3s, especially these ones. These 1, 2, and 3s are great. They bring in some money. They obviously still bring profitability. I want to see those in existence. But those 1s, those 2s, those can leave easy. But the 4s, the 5s, the 6s, the 7s, they ain't going anywhere. You don't want to know why? Because they likely don't have a choice. As long as those customers are in business, as long as they keep growing, who are they likely going to use as a platform to continue to grow? It's probably going to be Salesforce. And so that's why you see over time, you see businesses that are growing. Let me give you an example. Apple is a stock that has generally grown over time and has been very successful. It's the largest company in the world. However, if you look on a quarter over quarter basis, you see that some quarters and even some years are a bit choppy. Generally speaking, obviously the company's successful and they grow over time, but sometimes they have little hiccups in their numbers. Salesforce, being a 100% recurring revenue business, you see that the annual chart looks identical to the quarterly chart. Record number after record number, quarter after quarter. It's one of the most beautiful revenue charts in existence on planet Earth, in my opinion. And now they're reaching a scale that only a few companies ever reach. They're still a $140 billion company. That may sound large, and that is really big. They're one of the largest on the planet. But I think they have a lot more to go. If you look at the sales price, if you look at the stock price, it is a company that, in my opinion, has just gotten started. It's easy to look over the last 5 years and say it's been up 40%. At one point, it was up 200% over the last 5 years. It was a $300+ stock. But I think that this company will not only get back to its all-time high at 300, I think it will go far beyond that. And I think just a couple of years from now, we'll see 500. I think a decade from now, we'll see 1,000. I think that nothing can derail this company when you see charts like this and how ingrained their customers get, because their multi-cloud product creates cross-selling opportunities, a wide economic moat, and more importantly, as a shareholder, a profitable business model, as you can see from this long-term free cash flow chart right here. Thank you guys so much for watching. I appreciate you watching all the way to the end. Check out all the stuff down below in the description. Get signed up with One Finance if you haven't already. Without further ado, my name is Jordan. I'm the Millennial Investor, and I'll catch you guys next time.